Hello, this is Bebo Bevan with Oil and Gas 360. We're at the EnerCom Oil and Services Conference in San Francisco. Today we have the pleasure of talking to Craig Rasmuson, Chief Operating Officer at Synergy Resources. Welcome to the show, Craig.
Good to see you. Thank you. Thanks for having us.
It's good to have you back.
Appreciate
it. I'm just going to dive in and we'll get the story out on the table.
Sounds great.
All right. Synergy's tagline is "At Home in the Wattenberg." So for our viewers who may be new to the story, can you tell us what's the significance of that? Why is that meaningful?
You know, we are run by two co-CEOs, Ed Holloway and Bill Scaff. Ed has built 4 private companies since the 1980s and divested them all right here in the Wattenberg. He's known by everybody in the industry, and he knows everybody in the industry, whether it's peers and competitors or service companies, and the salespeople are now management people at those companies and alike. Bill Scaff himself is a Front Range guy, also grew up in Commerce City. Ed grew up in Fort Morgan. So this is home for them. And Bill was a gentleman on the financial side with Dresser and then Total. They became partners in the 80s and then full-fledged partners in the mid-90s. They are an unbelievable complement to each other. They've led our staff very, very well. They've lived through the downturns, and so they know how to manage their way through what we're experiencing as we sit here today. But our employees, myself included, 80% of us live in the communities that we're drilling within. We see these people at the grocery stores, we see them at church that we're dealing with, and it is our home. So we are at home. We're not looking to expand into other areas outside of the DJ. Yes, our focus and 97% of our CapEx over the last few years has only been spent in the Wattenberg of the DJ, the heart of the Wattenberg. But we do have acreage out in eastern Colorado and western Nebraska that is just options for us, and they're long-term leases, and we'll look at doing something in those basins when either commodity price and or term leases dictate that we do so.
Okay. Well, with that background, Synergy's horizontal program in the Wattenberg is a great example of multi-zone, pad drilling opportunity. And I know you guys have really hit that hard. Can you talk about the different zones and what you're seeing, what you're going after?
Right. There is, we've been targeting the Niobrara, the B and the C bench most exclusively. We did just recently drill, and we'll start completing here in March, our first Niobrara A bench well. We've been probably the industry leader in our basin, aside from a few other privates that are doing a nice job there too, in the Codell. Obviously the basin is known for the Niobrara, and everyone speaks of the Niobrara, but we feel the Codell is just as prolific, if not even better, when you look at 30-day, 90-day rates of production, and there's actually a little lower cost for us because the completion of the Codell is a slick water completion is what we've honed in on. We think that gives us the best results, and that's a little less expensive than a hybrid and chemical type completion that we would do in the Niobraras. So it is not just the A, B, and C bench of the Niobrara, it is the Codell. We're going to be testing the Greenhorn on our northeast extension here. Now, we've tested it, and we've got the science behind it with a vertical well last year. We're going to drill our first horizontal well there late this spring and have that in production hopefully this summer, and obviously then word to the street on how it did. But we're putting a lot of science behind that. It is, there's Sussex Shannon is shallower. The J Sand is deeper. J Sand being more of a natural gas. 97% of those reservoirs is natural gas. So commodity prices not dictating that anyone go chase that at this point in time. But the Wattenberg has been a basin that continues to give, years over years, downturns over downturns. It's the ability to refrac. We're seeing people starting to refrac in the horizontals. So there's great ability and great optionality for years and years to come with the leasehold that we have attained.
Okay. As you mentioned, today's oil price environment, everybody's been talking about that obviously for 6 months, but it's a different environment for people who've been trying to grow, et cetera. What is Synergy doing that's differently dictated by today's market conditions than you were, last year at this time?
Well, I mean, we've worked very hard to bring our drilling and completion costs down. We get the question all the time: is what's that price? What's that break-even price for commodity price? Is it $45? Is it $55 a barrel? That is not our determiner on accelerating and/or slowing. It's simply what's the cost. What's the cost to drill it? What's the cost to complete it? Kudos to our service companies. They've done a great job of bringing the costs in line with today's commodity pricing. We've worked some sliding scale options, if you will, with different, the larger, more expensive, whether it's the drilling side of it. We were drilling wells. The day rate of those wells back in December was $25,000 a day. Now our contract on a pad-by-pad basis, so we're not locked in for a long term. We have the option to slow if we choose to, or accelerate and add rigs if we choose to with the availability of rigs in the basin now. But now that's $20,500 a day. Completions of wells range from 1.2 to 1.8 million. Our new bids at $45 and $50 oil are in the $800 to $1 million range, 1.2 million, depending upon the type of amount of proppant and the type of the fluid system. So, long story short, I think I heard Anadarko make the statement that the 70 is the new 90 for commodity price. We firmly believe that also, to that same concept, is if we were drilling a well for 3.8 or $4.1 million at $90 oil, then a $3 million to a $3.2 or $3.3 million well looks awfully alike at $60 oil. We're optimistic. Nobody knows where this is going, and as we sit here today, we're in the high 40s of oil. We'd like to see 55, 60, 65, and we've kind of modeled out through 2016 a 2% increase of commodity price, and that takes us back into the 80s by the end of 16. So that sliding scale, that strip step up, hopefully will get us to where, with the price structure that we have today on our cost to drill and complete them, it still stays extremely economical for us. If we can get it to 70 with the costs that we're putting in the ground right now, we're going to be making really good money as we were at $90 a barrel.
Okay. Synergy just raised net proceeds of $190 million in an equity offering, and I believe you announced a $270 million CapEx spend for your 2015 fiscal year.
Right.
It doesn't sound like anything's slowing down in the world of Synergy.
No, our fiscal year, as you remember, is a little different. We start September 1. So our drilling side of that fiscal year, we're going to drill between 45 and 50 horizontal wells. And, we had 3 rigs doing that initially, and the efficiencies of the rigs had us way ahead of schedule. So we are down to 1 rig right now, but it's not a factor of the fact that commodity is down and we're slowing by any means. We were just so far ahead of schedule. We've got 29 wells as we sit here today awaiting completion. The rig's on the 3rd well of an 11-well pad. So by May, we'll have 40 wells in the ability to go ahead and put them into completion when we choose to, with either pricing and or service pricing, commodity pricing. But for us, it's all about a return on our capital, and that $190 million, yes, it's going to help us pay down a little bit of our debt that was in our credit facility, but it's there to be optionality. There's some distressed assets, and as quarters go by and redeterminations go by on credit facilities of different peers in our basin, we feel like we're going to have the opportunity to bolt on to some things we already have. It's for the heart of the Wattenberg. It's not money we would spend anywhere outside the Wattenberg. But if there's assets that come available, people aren't going to want. All 5 of our previous acquisitions had a stock component to them. People that are in this environment won't want stock. They're going to want cash, and we wanted to have that cash on the balance sheet to be able to pull the trigger if the right asset at the right price comes along.
That makes sense. What milestones does Synergy hope to achieve in the next 12 to 24 months?
Well, I mean, continue to, every day, we worry about creating shareholder value. We'll get these 40 wells turned on that we are going to have drilled, and hopefully at that point, here here in the next 6 to 8 weeks, we'll make a decision if we're going to keep that rig going forward. We'll have hit our CapEx. The CapEx we just spoke of was fully funded without the money raise we just did. So for us, it would be that if we were to continue going, we're going to have hit really what we had in our drilling budget. So that would be an acceleration for us, and we will make that determination. We may look at adding a second rig if we feel like prices are on an increase as far as commodity pricing and the revenue we can realize from that. So for us, it's get the Greenhorn drilled, hopefully make that a very good well. We've done enough science behind it that we are highly optimistic. We just increased our position out there. We were a 35% working interest. We just, with our partner, we just invested to pick up another 30%, so we're 65% working interest and the operator on those wells. So we're excited about that opportunity if we can make that work. There's 38,000 net acres for us out there to go ahead and develop, and it's very contiguous, and that's another whole. It's a company maker for anybody. With on top of where we've already been spending 97% of our capex in Wattenberg. So just continue to stay cost efficient and be ready to accelerate when the environment tells us it's time.
Well, it sounds like you've got yourself in a pretty good position to do both. So that's great. Well, I really appreciate you spending time with us today, catching people up on what's going on in Synergy.
Thank you to EnerCom. We appreciate it.
Sure. Well, we just spoke with Synergy Resources, Craig Rasmuson, Chief Operating Officer, and Oil and Gas 360 from San Francisco.